Greetings, members one and all of the Salivation Nation. Gold has marked a little bit of a pullback in 4 sessions since the recent high that it had attained in nearly 8 years, but it is going to turn around again. I can almost bet the bank on it. Let's explore! That's right, gold futures hold on to a week-to-date gain, and I think that gold will continue to climb as well, too. There's a little pullback. We're going to explore that in this article here from Market Watch. Gold futures finished lower Wednesday as the U.S. dollar strengthened, with the precious metal pulling back a day after their highest finish since 2012. But a retreat in equities amid reports of rising coronavirus cases in many U.S. states helped to limit losses for the safe haven asset. It seems like a classic battle between the bulls and bears after gold's very impressive rally over the last couple of days, said Brian London, editor of a Gold Newsletter. After such strength, it's only natural to see some consolidation in the gold price, and it's only natural to expect those with short positions that are underwater after the rally to take advantage of a pause to defend their positions. So August gold fell $6.90 or 0.4% to settle at $1,775.10 an ounce after spending the day trading between a low of $1,770.60 and a high of $1,796.10. It settled Tuesday at the highest for a most active contract since October 4th, 2012, when prices ended at $1,796.50. And to think about that, from 2011 through almost the beginning here, or through the middle of the fourth quarter of 2012, gold was up very high. That's just crazy. Price is still more than 1% higher week to date. July silver, meanwhile, retreated 39 cents or 2.2% at $17.67 following a 0.9% rise in the previous session. Let's actually take a look at where the gold and silver prices are right now, and you can see that silver is taking a bigger hit on the pullback today, and as is usually the case, silver typically performs a little bit better than gold, but not a whole lot better. And when it falls, silver takes a bigger hit. Now the gold to silver ratio is right around 100 to 1. But gold is only taking a very, very slight decrease here. And just goes to show you the resiliency of gold during these times. COMEX gold bears are making every effort to prevent the metal from breaking past $1,800, said Chintan Karnani, chief market analyst at Insignia Consultants, in emailed commentary. The second quarter is coming to an end, and gold will see a sharp correction if some large trader looks to book a half-yearly profit in gold. And that will be the key here. We'll see what happens if there's a lot of selling off to gain some profits here, I guess, at this time. And this is an example probably of manipulation, taking profits. But is it manipulation? It's just people taking advantage of the market and where the prices are. And that's a natural occurrence, which is why I always believe that the natural market forces are extremely powerful in these conditions, these markets. There is no fundamental conditions to suggest a gold price sell-off, said Karnani. Everything is bullish, with the U.S. and Europe seeing considerable increases in COVID-19 cases. That's true. There are increased cases, especially in the south and western part of the United States here, and other nations. Even China, I think, has increased cases. The metal posted gains in each of the last 3 trading sessions, gaining momentum even as stocks have been buoyant in the past few weeks, partly because investors have been hedging their bets, fearful that the advance in equities from the coronavirus nadir isn't sustainable. In fact, the rally prompted further investment demand for gold as an increasing number of traders are viewing the continued gains on stocks as fragile and unsustainable, wrote Carlo Alberto de Casa, chief analyst at Active Trades in a research report. The market is down today. Weakness in stocks comes as new coronavirus cases have jumped in the U.S. states of Arizona, Texas, and California, reigniting concerns about a resurgence of the virus and potentially throwing into disarray attempts to restart businesses locked down by the epidemic for months. We're already starting to see some in those states, clubs, areas where people are gathered tightly, choose not to open or to greatly restrict people from popping in, and other states requiring masks to be worn. This virus is very real, folks, and this resurgence, which, by the way, is not a second wave. Make no mistake, this is a continuation of the first wave. It's just a increased cases in some of those states, because they really haven't come down to such a level to where it can be considered really part of a second wave, just an increase of that. Well, maybe we can call it kind of a front end wave of where the cases were coming down. But some people predict that there is a second wave that's going to come later, and but we'll see how it plays out and how it times with a supposed vaccine. The rise in infections prompted the governors of New York, New Jersey, and Connecticut to mandate that visitors to those states coming from hotspots quarantine for at least 2 weeks. Meanwhile, the International Monetary Fund on Wednesday slashed its economic forecast for 2020 to negative 4.9%, saying that the coronavirus pandemic has caused an unprecedented decline in global activity. And that just means that the more we deal with this, the worse things are going to get economically. This is definitely discouraging news, which means it's going to be positive for gold especially. And the fact that silver is not reacting is frustrating for many stackers out there. Even with premiums increased, it still is not, we're still not that much more above in silver price than we were pre-pandemic times. Reports of possible trade tensions between the United States and European and North American allies also was drawing attention after reports indicating that Trump administration was considering imposing tariffs on an array of goods from Europe totaling $3.1 billion, as well as reimposing tariffs on aluminum imports from Canada. Elsewhere on COMEX, metals ended broadly lower on the heels of the bearish economic prospects, and they talk about copper and platinum has fell, and as well as palladium. Again, taking a look at where the markets are, you can see there that there is a decline slightly in the metals, but again, I think this is just a little dip, and we're going to see the metals continue to go up. Now, there has been some conflicting housing data that has been relatively positive. Make no mistake, people want to get back to normal. But depending on the severity of these cases and this run around, there's some I've heard rumors, and I don't know how substantiated this was, that the contagion factor has gone down and that the severity has gone down. But I don't know. It's hard to tell what to believe anymore with this virus. But it is, I think, should be obvious to everybody now that there is a resurgence, even with increased testing, which, yes, increased testing does mean that more positive cases will be discovered, but more positive cases where people are getting sick, and compared to the testing ratio is what's increased as well. It is enough that it has concerned DeSantis out of Florida and Abbott out of Texas. So we'll see how things play out with this, but I'm hoping that we can get things to subside there, and thankful that for some of the states that are starting to see a steady decline. New York is getting somewhat of a reprieve, and but nonetheless, the metals are reacting and doing what they do. Overall, they are, especially gold right now, is at its near 8-year high, and I think that just goes to show you that gold bodes well in times of crisis. And people are frustrated about silver. But we have to be extremely patient with silver. And it is trying people's patience right now, and it's understandable so. I think silver's reaction is somewhat unprecedented, given these markets today. And it's unprecedented to the downside, unfortunately. and gold is acting normally. Really, it should be this high, and the silver should be much higher, in my opinion, but it's not, and it's staying where it is. And that silver to gold ratio being right around 100 and 100 plus to 1 for this long is a little troubling. When will it catch up? How many months will it take? At this point, I would have expected it to start to rise along with gold and stay and squeeze that ratio down. But if this stays where it is and ratio spreads, and this stays this far apart, then we may see a new normal for the silver to gold ratio. Even as the prices climb for gold, silver may not break that ratio barrier between 98, 97, and it could stay up above that. We'll find out. But nonetheless, very interesting times we live in, an interesting news day with a very slight pullback. Definitely not enough to make buys, in my opinion, because it's not that much difference. Maybe for silver it is, but not for gold, down only $3.50. But there it is. Post your thoughts below. We'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.